on the year. It recently showed strong resilience, rebounding sharply to nearly 39 cents after a brief dip to 38 overnight.
You know that feeling right after watching the XLM video we just watched? It's not excitement, not confusion. It's that slow tightening in your chest when your brain says, wait, this might actually be real. Because there's a narrative beginning to form around Stellar's XLM that doesn't look like the usual crypto hype story. It doesn't start with moon emojis or price targets shouted into the void. It starts with something more subtle, expert expectations and structural projections looking ahead into 2026. And here's where most people get this wrong. They hear bullish and assume parabolic price action tomorrow. Experts don't talk like that. They talk about potential, adoption, ecosystem evolution, and structural factors that could make a project resonate over time. So when forecasts and expert analyses start leaning bullish on XLM for 2026, that's worth pausing on. Let's break it down slowly. The numbers, the reasoning, the context, without hype, without shouting, just clarity. First point of confusion. Many prediction pages show very different numbers for XLM in 2026. Some are conservative, others are more optimistic. That's because there isn't one single expert consensus. Different analysts use different models. For example, some projections show XLM trading relatively modestly near current levels in 2026. Others, with more bullish assumptions, have stellar growth paths where XLM could significantly appreciate, even technically breaking past resistance levels and entering higher valuation zones. That's where the very bullish by 2026 narrative often comes from. So what do experts actually base this on? Stellar was built for efficient, low-cost value transfer and asset tokenization. This isn't just theory. It's a real niche the network is designed to fill. As global financial systems talk more about tokenized settlements and faster international payments, Stellar's utility matches those needs. That's why some outlooks put the price much higher in 2026, not because of meme energy, but because they assume actual adoption increases over time. Sites that compile technical and model-based forecasts show bullish scenarios for Stellar's price in 2026. Multiple analysts place XLM in higher zones than its current trading range. Some well over double or triple from here, depending on market conditions and adoption momentum. That doesn't mean price will hit a specific figure. It means the potential drivers that could push it there are visible ecosystem growth, enterprise interest, partnerships, network upgrades, etc. Here's a structural insight most people miss. Price often lags real adoption. Institutional flows, exchange integrations, and deeper ecosystem use cases don't always show up immediately in price, especially for assets like XLM that are positioned more as infrastructure than speculation. That's a key reason experts sometimes see a bullish scenario for late 2026. The market may only price in the real use later. Some forecasts are cautious, even bearish. Others are moderately bullish. And a few see much stronger upside if certain adoption thresholds are crossed, like deeper use in tokenized payments or wider institutional acceptance. What ties these models together is not identical numbers. It's the logic behind them. Increasing demand for faster cross-border settlement. Rising interest in tokenized assets. Greater appetite for scalable, low-cost blockchain rails. When those conditions improve, Stellar's design looks very relevant. So when people say XLM will be bullish by 2026, they're packing together real utility, structural adoption potential, scenario-based forecasts, evolving financial rails, not just hype, not just price guessing. That's where expert prediction really differs from casual talk. Next, we'll unpack what key signals you should watch between now and 2026 that actually indicate whether those bullish scenarios are unfolding, including adoption signals, ecosystem growth benchmarks, and narrative shifts that matter in real markets. Because price by itself doesn't confirm anything. Utility does. Adoption does. System-level integration does. And those are the metrics experts are really looking at when they talk about XLM's potential in 2026. Now let's slow this down and talk about how experts actually arrive at those bullish XLM projections for 2026. Because it's not vibes. And it's definitely not price charts alone. If you think back to the XLM video we just watched before this section, notice what wasn't emphasized. There was no obsession with daily candles. No shouting about a breakout tomorrow. Instead, it focused on signals. That's exactly how long-term forecasts are built. Experts don't ask, will XLM pump? They ask, is Stellar becoming more necessary? And that's a very different question. Let's start with the most important signal. Use case alignment. Stellar was built for payments, settlement, and tokenized value transfer. Not gaming. Not memes. Not experimental DeFi. Payments. That matters because payments are one of the few crypto use cases that already exist at massive global scale. Cross-border payments are slow, expensive, and fragmented. Everyone knows this. Banks know it. Governments know it. Institutions know it. So when experts look at XLM, they're not imagining a new market being created. They're looking at an old market that desperately wants better rails. That's why Stellar keeps showing up in conversations around remittances, on-chain asset issuance, regulated financial access, low-cost global settlement. Those aren't retail narratives. They're system narratives. And systems don't move fast, but when they move permanently. The second signal experts watch is network behavior, not price behavior. Is the network being used consistently? Are transactions cheap and predictable? Is finality reliable? These things don't trend on social media, but they matter deeply to anyone building on top of a network. Stellar's fee structure is boring, and boring is powerful. When costs are predictable, businesses can plan. When finality is fast, risk drops. When reliability is proven over years, trust compounds. Experts project forward by asking, if adoption increases even modestly, does the network break? With Stellar, the answer is usually no. That's one reason long-term outlooks skew bullish. The system doesn't need a miracle to scale. It just needs incremental adoption. Now let's talk about institutional comfort because this is where 2026 really comes into focus. Institutions don't jump in early. They observe. They test. They pilot. They wait. That waiting period is often mistaken for rejection by retail. It's not moving, so no one cares, people say. But experts understand that this phase is where frameworks are built. Compliance is reviewed. Risk committees are satisfied. Infrastructure is evaluated. Stellar fits neatly into that process. It's not constantly reinventing itself. It's not chasing every trend. It's not hostile to regulation. That stability is a feature, not a flaw. So when experts say bullish by 2026, what they're really saying is, by then, enough of these slow institutional processes may have matured. Not guaranteed, not promised, but plausible. Another key signal is ecosystem maturity. Experts don't just look at the core protocol. They look at what's being built on top of it. Are assets being issued? Are bridges forming? Are developers staying or leaving? Stellar's ecosystem isn't flashy, but it's consistent. And consistency over multiple years is rare in crypto. Projects come and go. Narratives explode and collapse. Teams disappear. Stellar just keeps operating. That endurance feeds into long-term confidence. Then there's the macro layer, which experts never ignore. By 2026, the global conversation around digital currencies, tokenized real-world assets, faster settlement layers, is expected to be far more advanced than it is now. That doesn't mean Stellar wins everything, but it does mean the environment may be more favorable to networks designed for compliance-friendly value transfer. Experts model scenarios, not certainties. In bullish scenarios, Stellar captures a slice of this evolving system. Not dominance, participation. And participation in global settlement flows doesn't require hype. It requires trust. Here's the part retail often misunderstands. A very bullish expert outlook does not mean straight line price appreciation, constant green candles, viral attention. It means asymmetry. It means that if certain adoption thresholds are crossed, price could reprice meaningfully because the market was underestimating long-term relevance. That's why timelines matter. 2026 isn't random. It gives time for infrastructure decisions to finalize, pilots to turn into production, narratives to shift from speculation to usage. Experts think in windows like that. And right now, XLM sits in an uncomfortable place. Too boring for hype traders. Too visible to ignore. Too functional to dismiss. That's often where long-term value quietly forms. So when you hear experts predict XLM to be very bullish by 2026, don't translate that as a promise. Translate it as a warning. A warning that price today may not reflect relevance tomorrow. Next, we'll go deeper into what could actually invalidate these bullish projections, what risks experts are watching closely, and how to think clearly instead of emotionally when a long-term thesis is still forming. Because clarity isn't about believing. It's about understanding why people with long-time horizons are paying attention. Now we need to talk about the part that actually determines whether those bullish 2026 projections survive. Because here's the truth most people don't want to hear. Bullish forecasts don't fail because price didn't move fast enough. They fail because assumptions break. So in this section, we're going to strip emotion out of it and look at what has to go right for XLM to justify a very bullish outcome by 2026, and what could quietly derail it. This is where clarity replaces hope. Let's start with the first major pillar, adoption execution. Experts don't assume adoption just because a network is capable. Capability is step one. Execution is everything. For XLM to meet bullish expectations, Stellar must continue doing what it's known for quietly doing already, integrating into real payment flows, not experimental use cases. That means real entities using it repeatedly, real volume, not test transactions, real reliance, not one-off pilots. If adoption stays superficial, price projections collapse. Experts know this. That's why many forecasts are conditional, not absolute. The bullish case assumes Stellar continues to convert interest into usage. Now here's the subtle risk. Adoption doesn't fail loudly. It fades quietly. If by 2026 Stellar is still mostly promising, still mostly testing, still mostly exploring, then the market won't reward it, no matter how good the tech is. So the question experts ask isn't, is Stellar good? It's, is Stellar becoming necessary? That distinction matters. Next risk, competition pressure. Payments is not an empty field. XLM doesn't operate in isolation. There are other networks targeting settlement, remittances, and tokenized value. Some are louder. Some are better marketed. Some are politically aligned differently. Experts don't assume Stellar dominates. They assume it competes. And competition compresses margins, narratives, and sometimes relevance. The bullish scenario assumes Stellar maintains a defensible niche. Low fees, fast finality, regulatory comfort, simplicity. If another network matches those traits while capturing attention faster, XLM's upside narrows. Not disappears, narrows. That's an important difference. This isn't an all-or-nothing game, but it is a relative one. Another major variable experts watch closely is regulatory alignment. This is where Stellar historically performs well, but it's also where external risk exists. If global regulatory frameworks move in a direction that favors certain architectures or settlement models, Stellar could benefit. If they move in a direction that restricts token usage or complicates on-chain settlement, growth slows. Experts don't try to predict regulation perfectly. They assess resilience. Stellar's design suggests it can adapt without major disruption. That's a plus. But regulation is never neutral. It always creates winners and losers. The bullish case assumes Stellar lands on the right side often enough. Now let's talk about something people underestimate: narrative fatigue. XLM has been around a long time. That's a strength structurally and a weakness psychologically. Retail often equates new with valuable. Experts don't. But price is still influenced by attention cycles. If Stellar remains invisible to broader market narratives for too long, repricing can lag even real adoption. That doesn't invalidate the thesis. It delays it, and delayed theses test patience. That's why 2026 matters. It's not tomorrow. It's not next month. It's far enough out that cycles can reset, narratives can rotate, fundamentals can finally overpower attention bias. Experts are essentially saying, if XLM hasn't meaningfully repriced by then, something structural didn't materialize. That's not bearish. That's honest. Another critical risk is execution complacency. When a network is stable and reliable, there's a temptation to move slowly. Stability can turn into stagnation if leadership loses urgency. Experts monitor this closely. Are upgrades still happening? Is developer support growing? Is the ecosystem evolving, not just maintaining? Bullish forecasts assume Stellar continues evolving without breaking what works. That balance is hard. Now let's flip this and talk about what strengthens the bullish case. Because risks exist, but so do compounding signals. One major bullish reinforcement would be tokenized asset growth. If Stellar becomes a preferred rail for issuing and transferring real-world assets, that changes valuation frameworks completely. Suddenly, XLM isn't just a payment token. It's a settlement lubricant for on-chain value. That's when price models start expanding. Another reinforcing signal would be repeat institutional usage. Not announcements, not partnerships. Usage. When entities quietly continue using a network without fanfare, that's when dependence forms. Dependence leads to stickiness. Stickiness leads to repricing. Experts look for boring repetition. That's how conviction builds. The final reinforcing factor is macro alignment. If global financial systems accelerate their shift toward faster settlement and on-chain representation, networks already designed for that win by default. Stellar doesn't need perfection. It needs timing. So here's the reality. Experts predicting XLM to be very bullish by 2026 aren't making bold claims. They're mapping scenarios. They're saying, if adoption deepens, if competition doesn't erode relevance, if regulation aligns reasonably, and if execution remains steady, the current price may dramatically underestimate long-term positioning. That's it. No hype, no guarantees, just asymmetry. The hardest part of long-term conviction isn't belief. It's patience. Now let's bring this all the way home. Because after all the projections, the expert models, the risks, and the timelines, the real question isn't whether XLM could be very bullish by 2026. The real question is how you think clearly before the market decides. This is where most people get it wrong. They treat long-term forecasts like short-term signals. They expect price to react immediately. And when it doesn't, they assume the thesis is broken. But long-term positioning doesn't feel rewarding at first. Feels quiet. Feels boring. Sometimes it feels wrong. That's normal. If Stellar's bullish scenario plays out, it won't happen because everyone suddenly agrees XLM is valuable. It will happen because usage quietly increases, reliance deepens, and the market eventually has no choice but to reprice. That's how infrastructure assets move. They don't announce themselves. They reveal themselves over time. So preparation right now isn't about chasing confirmation. It's about understanding what would change your mind. If adoption stalls, if competition overtakes relevance, if regulation moves decisively against on-chain settlement, those are reasons to reassess. But as long as those haven't happened, patience becomes a strategy, not a weakness. Experts think in windows. 2026 is one of those windows. It's far enough away for systems to mature, but close enough that early positioning still carries asymmetry. That's why forecasts point there. Not because price is guaranteed, but because by then the question, does Stellar matter? Should have a clearer answer. And clarity is what moves markets. Until then, the hardest thing to do is nothing. To hold without obsessing. To observe without reacting. To stay grounded while others chase noise. That's the real edge. If this video helped you see XLM more clearly, beyond hype, beyond fear, take a second and like it. It helps push thoughtful crypto content instead of noise. Subscribe if you haven't. This channel isn't about predicting tomorrow's candle. It's about understanding where the system is moving before price catches up. And let me know in the comments. Do you think Stellar's role will be clearer by 2026? Or do you believe the market will keep overlooking it? I read every comment, because in the end, the biggest opportunities don't come from certainty. They come from recognizing when the future is still undecided, and positioning calmly while everyone else waits for permission.